What's up, value seekers? Dave here, and today we're tackling a titan in the semiconductor world, Applied Materials, ticker AMAT. The stock's seen some volatility lately, leaving many wondering, is the bottom in, or are we heading for deeper waters? Stick around, because we're about to dive deep into AMAT to find out. Alright, so when we look at AMAT, the market narrative is pretty clear, but also kind of conflicted. On one hand, everyone's buzzing about the massive long-term growth driven by AI and advanced semiconductor manufacturing. I mean, these guys are at the heart of making those chips. But then you've got these nagging short-term headwinds, mainly from the US-China trade tensions and export restrictions. It's like a tug of war between future potential and immediate geopolitical uncertainty. For those new to the show, Applied Materials Inc., or AMAT, is an absolute powerhouse. They provide the critical equipment, services, and software that are essential for making semiconductor chips, displays, and related tech. Think about every iPhone, every server powering AI. AMAT likely had a hand in the tools that made those components. They've got three main segments: semiconductor systems, applied global services, and display and adjacent markets. Management recently gave us some numbers, reporting strong Q3 FY25 results and sticking to a mid-single-digit revenue growth outlook for the full fiscal year. But here's the kicker. They also explicitly guided for a sequentially lower Q4, pointing directly to those China-related uncertainties. So, good long-term, but some bumpy roads ahead apparently. Okay, now for the juicy part, our scenario analysis, where we take all this market chatter and company guidance and put it through the "is the bottom in" grinder. We're essentially reconciling that strong long-term AI-driven narrative with the company's more cautious near-term outlook regarding China. So let's break it down into our three cases, starting with what we think is the most likely path. First, our base case, which we're giving a 50% probability. We figure AMAT's going to successfully navigate these near-term China headwinds, just like management's Q4 guidance suggests they're planning for. They'll continue to capitalize on the massive demand coming from AI and advanced packaging in other regions. Management's commitment to mid-single-digit growth for the full fiscal year, despite the China situation, shows the resilience of demand elsewhere. We're assuming the digestion of capacity in China and that large backlog of pending export license applications are temporary speed bumps, with other strong geographies picking up the slack. For valuation, we took their current EPS of $8.39, projected a forward EPS of $9, reflecting that mid-single-digit growth and a modest margin improvement post-Q4. We then applied a forward PE multiple of 25x, which is a slight discount to its current PE, given the China uncertainties, but still robust for the long-term prospects of this industry. That brings our base case fair value to $225. Now, the technicals actually align with this. The stock is currently trading around the lower end of its recent consolidation, suggesting it's holding near a fair value, aligning perfectly with this base case. Next up, our bull case, coming in at a 15% probability. This is where everything goes right. We're talking about the China export license situation resolving way faster and more favorably than anyone expects, clearing that backlog. On top of that, AI-driven demand for advanced packaging and high-bandwidth memory absolutely explodes, pushing leading-edge customers to ramp up fab investments even more aggressively. AMAT drops some new products that just dominate the market, expanding margins across the board. For valuation, we're assuming a robust 15% growth above current EPS, taking us to $9.65. Then we slap on an expanded PE multiple of 29x, reflecting that incredible growth, improved sentiment, and AMAT's absolutely critical role in the AI build-out. This gives us a bull case fair value of $279.85. Why only 15% probability? Well, the chart tells us the stock actually needs to break above $242 to resume an uptrend. That's a significant move from where we are now, so while it's possible, it's not the immediate path without a huge catalyst. Finally, the one nobody wants to talk about, our bear case, which we're giving a 35% probability. This is where the US-China trade conflict gets even uglier, with persistent export license denials and a prolonged decline in AMAT's China revenue. On top of that, we see a deeper or longer global semiconductor capital expenditure downturn, maybe triggered by a broader economic slowdown. That non-linear demand from leading-edge customers just becomes a huge drag. In this grim scenario, we're modeling a 10% decline in forward EPS, bringing us down to $7.55. Then we apply a conservative PE multiple of 20x, reflecting reduced growth, increased risk, and negative market sentiment. That puts our bear case fair value at $151.00. And honestly, the technical analysis really backs up this higher probability for a bear outcome right now. The stock just broke down from its multi-week consolidation, indicating weakness and increasing the chances of retesting those major supports if the fundamental headwinds intensify. All right, let's pull up the chart and see what the technicians are saying. Here's what I'm seeing. AMAT has been stuck in a multi-week consolidation range, bouncing between 220 and 242. But here's the critical part. It has recently broken down from that consolidation range, which is not a good sign. From here, major supports are looking to be at $210 and then down to $200. If you want to see this stock resume an uptrend, it absolutely has to get back above that $242 level and hold it. Until then, the path of least resistance looks to be lower. So, is AMAT a buy? Combining our analysis, the bottom is likely not in just yet, but we are nearing potential support areas. We've got strong long-term tailwinds from AI, no doubt, but the near-term headwinds from China, coupled with the recent technical breakdown, give us pause. Our weighted fair value leans closer to our base case of $225, but with that higher probability in the bear case and the current technical weakness, there's significant downside risk. My verdict, AMAT is a fundamentally strong company with great long-term prospects, but patience is key here. The stock needs to find its footing and confirm a new support before calling a definitive bottom. Given our scenario analysis and the chart, here are the levels I'm watching. Our base case fair value is around $225. However, with the technical breakdown, I'd be looking for AMAT to either retest and hold those major technical supports at 210 or even 200. If it hits those levels and shows signs of stabilization, that could be interesting. For the more aggressive, a sustained break and hold above 242 would signal a potential return to strength, but that's a higher risk entry given current conditions. All right, that's my deep dive on AMAT. What do you think? Is the bottom in? Let me know in the comments below. If you found this analysis helpful, smash that like button, subscribe to the channel, and hit the notification bell so you don't miss our next episode. As always, folks, remember, this is for informational and entertainment purposes only. I'm not a certified financial advisor. Financial advisor, and this isn't financial advice. Always do your own due diligence, consult with a professional, and understand the risks before making any investment decisions. Investing in the stock market carries inherent risks, and you could lose money. Past performance is not indicative of future results.